It began with a contradiction so violent and so fundamentally incompatible with how nuclear deployment usually unfolds in the United States that even veteran investors felt the jolt. In this industry, there is an order that almost never changes. First comes research, then prototype testing, then the brutal march through regulatory design certification by the Nuclear Regulatory Commission. And only after clearing that summit do utilities move toward a final investment decision, groundbreaking, and construction. That is the normal sequence. That is the pattern carved into decades of American nuclear development. NuScale Power broke that sequence in a way that felt impossible. The company achieved NRC certification in 2020 for its 50 megawatt module, and then again in 2025 for its upgraded 77 megawatt module. These certifications are considered the hardest achievements in the entire new commercialization process. Under usual circumstances, they unlock demand because certification removes the single largest source of uncertainty. But in 2025, NuScale still had 0 reactors under construction anywhere in the world. A company conquering the highest regulatory barriers but failing to reach the commercial starting line is not just unusual, it is unheard of. That inversion alone forced investors to consider that something deeper, unseen, might be blocking what should have been a clean path to deployment. The company's origins only sharpened the confusion. In the early 2000s, the Department of Energy funded advanced small reactor research at Oregon State University and Idaho National Laboratory. In 2007, that research spun out into NuScale Power. When a nuclear technology emerges through that pipeline, the historical pattern is almost always the same. One demonstration plant gets built. It may be slow, expensive, or politically messy, but it gets built. That is what federal backing normally guarantees. Yet the closer NuScale moved toward regulatory maturity, the further away commercial adoption drifted. The drift became unmistakable through the carbon-free power project launched in 2016. It had roughly $1.4 billion in DOE support, long-term subscription agreements from municipal utilities, and a confirmed site at the Idaho National Laboratory. Under normal nuclear development behavior, a project with that level of political, financial, and regulatory backing would proceed to construction, or at worst face a delay or scope adjustment if costs changed. But in late 2023, CFPP was not delayed or restructured or phased. It was terminated completely. Such full collapse of a federally backed nuclear demonstration project is extremely rare. This suggested that the barrier was not simple inflation pressure, but something structural, something that prevented the project from advancing even with overwhelming institutional support. For investors, this event was a signal so strong, it reshaped how they viewed every subsequent development. In early 2024, NuScale performed a major restructuring. R&D staff were reduced, and the company repositioned itself as a commercialization-oriented organization. In normal nuclear sequencing, such a shift happens after a first-of-its-kind plant begins construction because engineering intensity decreases only once deployment begins. NuScale made this pivot with no construction underway, which inverted the logic of a typical nuclear commercialization timeline. This forced investors to consider whether the company was ready for a new phase or whether it was reacting to stalled commercial progress. Then the company raised capital repeatedly. Across 2025, NuScale issued new equity several times, raising around $475 million. Early-stage nuclear companies do rely on equity, but the scale and frequency here were unusually high. Typically, once a project reaches final investment decision, project-level financing takes over through banks, export credit agencies, and engineering, procurement, and construction partners. With no project at that stage, NuScale relied heavily on shareholder capital. For investors, this meant the commercial delays and the dilution risk fed into each other. But just as the dilution accelerated, something else happened. Romania's Doi Chesti project emerged with strong momentum. The United States, through Exim Bank and the International Development Finance Corporation, signaled support approaching $4 billion. In European nuclear deployment, a coal replacement project with multilateral funding usually progresses predictably toward a commitment. Yet Romania still did not announce its decision by late 2025. The delay contradicted the usual European pattern and implied that hidden economic or institutional uncertainties might be interfering. Another twist emerged in the United States. NuScale announced a potential deployment pipeline of up to 6 gigawatts with Entra1 Energy and the Tennessee Valley Authority. TVA is known for conservative engineering risk assessment and strict internal review. Normally, TVA's involvement signals extremely high confidence, but this alignment came just months after CFPP collapsed. That timing was so unusual it forced investors to consider two competing theories. Either TVA saw compelling evidence that UAMPS did not, or national policy incentives were shaping utility behavior behind the scenes. NuScale's financial filings added more questions. In its 2025 third quarter results, the company recognized a non-cash milestone contribution from Entra1 valued at roughly $500 million. In conventional infrastructure accounting, milestone recognition usually follows binding commitments or final investment decisions. Recognizing such a large milestone before any construction activity is initiated is highly unusual, even when compliant with accounting rules. This created two opposite interpretations. Either NuScale was signaling imminent commercial movement, or it was positioning its financial statements to compensate for the absence of tangible construction progress. All of these contradictions became visible in the stock's behavior. Over 12 months, NuScale swung from around $11 to more than $57. Such extreme amplitude is rare for nuclear developers without commercial deployment. The surges were powered by macro narratives, like the explosive power demand from AI data centers and the renewed emphasis on nuclear energy as a national priority. Because NuScale held the only certified SMR design in the United States, it became a proxy for multiple megatrends. But each surge collapsed back into a downtrend as investors returned to fundamentals. By late 2025, the stock traded near $20. Short-term technical indicators showed strength with prices above the 5, 10, and 20-day moving averages and momentum oscillators nearing overbought territory. ADX readings above 60 showed strong short-term trend conviction. But the long-term trend remained negative with the stock well below the 200-day moving average. This created a tension between short-term optimism and long-term structural skepticism. All of this leads back to the unanswered question that defines NuScale's entire valuation. How can a company achieve NRC certification, which is normally the single largest barrier, and still fail to secure even one final investment decision? In the usual nuclear deployment sequence, design approval is the gatekeeper, and once achieved, utilities almost always move toward anchoring a first project. The absence of any such commitment implies that economic, institutional, or strategic constraints may be silently affecting utility decision-making in ways ordinary investors cannot see. For short-term traders, the current setup points to tactical upside toward $25, with potential extension into the low 30s if momentum strengthens. For medium-term investors, everything depends on 2025 to 2026 final investment decisions in Romania and within the Entra1 and TVA pipeline. If either commitment materializes, valuations between $35 and $40 become plausible. For long-term investors, NuScale represents a profoundly asymmetric bet. Success means leadership of the global SMR market. Failure means drifting back toward the $15 to $18 support range if delays continue and dilution accelerates. At this point, I want to speak directly to the audience. If you follow developments in advanced energy tech or you track public and private companies preparing for transformative shifts, the Valuester channel is collecting suggestions from listeners. If you have tickers or upcoming listings or private names or even crypto assets that deserve a deep dive, leave them in the comments. Your input shapes future investigations, and your participation keeps this channel ahead of the curve. And to all of you who watch, subscribe, like, comment, and share these episodes, thank you. Your support fuels the work and enables deeper, more rigorous analysis every time. NuScale Power now stands at the edge of two possible futures. One future is a landmark moment where a reactor breaks ground and the entire SMR thesis transforms from promise to reality. The other future is prolonged delay and erosion of investor confidence. The fate of this technology and the value of this company hinge on a single event, the first groundbreaking. Until then, investors are suspended inside a contradiction that refuses to resolve itself, a company that has passed every test except the one that proves it can operate in the real world. This was Value Stir.